undramatic versus what happened yesterday. That was crazy.
I mean, so you're back here at a buck, right?
Yeah, like 140. Yeah,
140. I mean, that's nuts. That's nuts.
it's nuts. I mean, it was not a huge position because it was definitely at a point where, there was a chance they were going bankrupt. I've talked about how I size these. They're like 1% positions or whatever, but like at most, 50 to 100 basis points. But, and I didn't add along the way. But yeah, if I had been sure that they weren't going to go under, it would have been a life-changing and retire kind of trade. But I'm still happy with how it's worked out. I haven't sold any. Well, I think I sold some maybe around 5, maybe like 20% of my position. But I basically took my money off the table at one point. And now it's all the house's money.
I get misty-eyed when I hear that. That's right up my alley. I love
it. Yeah, exactly. It's like it took out what I put in, and then letting the rest ride.
It's a thing of beauty.
David, I saw Lilly raise their dividend by 15%, but it's kind of like, does anybody really care? Because the yield is still below 1%. I don't know that anybody owns it for the dividend, but I guess it's nice if you do own it. You got a little bit more, but it's one of those names I watch, and it's not one I buy for the dividend anyway.
You're not looking for that yield?
No. Not at, what is it, 0.6% now?
At a higher risk.
It used to be a nice yield before the stock tripled.
Look at this thing. Good God.
Wait, so are you out of your long trade, David, or are you still there?
No, still there, down a single digit, but I don't want to say too much until the show begins.
Okay.
I know. Well, you can repeat yourself.
I want to steal your thunder. I'm sorry.
Yeah.
I was so impressed by your ability to turn around and flip on your position for a trade, because it's something that I have a lot of trouble with.
So 2 ways to think of it. One is like, look, you have to be that flexible. The other is if you're in Las Vegas and you're playing roulette and you're red, and then well, what's the choice? Just put some on black this next time. I think it's a little better than that bet, but yeah, they're just stocks. They don't like you.
Yeah, it looks like everything's down today. Well, not everything, but a lot of red on the screen here. Well, for the banks are bouncing a little bit here.
Tesla is at 403. It's $10 away from a new all-time high.
Wow.
Unbelievable.
Google's having a good day today, too.
Oh, yeah, I saw that. Microsoft's up a little bit.
Unbelievable.
Yeah, I've got a very mixed screen today.
Walmart's bouncing back.
I want to talk about Hims, Lilly, Insurers, RFK Jr. How about that?
What about Amgen? You're not going to talk about Amgen?
Amgen had some good data out, by the way.
I know, and it's down this morning. It's down. What is it?
It's because the data, one of the products that they had great data on is already out, and so this would be for a new indication. It's life-changing for the people who have this, but it's their problems are bigger than just like 1 or 2 products. So.
The 50-day just came down to the 200, so this is dead. Niedermeyer dead.
On which stock?
Amgen.
Yeah. I own it, but I got covered calls written on it down here, so I'm kind of okay with that.
Not really, though. We know how that works. Like, I wrote covered calls on it, so I'm okay, except that it's down and the covered calls don't do that much.
Rock and roll.
I wrote the covered calls at 260, so it's all right here.
All right. I'm only teasing you.
Okay, well, Looks like it's time for us to get started. Hello and welcome to the Beats Roundtable. I am Berna Barshay. Today is Tuesday, December 10th, and our group is here and ready to talk the markets and their best investment ideas. With us today are Bob Morris, David Maris, and Kevin Baker. I'm going to start with Bob because he is our energy guy, and there's a lot going on in the Middle East this week. I mean, really for the last year, but especially this week. So, and that of course affects the price of oil and the outlook for the energy companies. So, Bob, what are you thinking about?
Yeah, thanks, Berna. So, it's one of those times in the stocks where you don't really want to do anything. You kind of want to watch the market and see where things settle out here. And that's because we're sort of watching the commodity price here. As you pointed out, there have been a lot of events in the Middle East. And of course, this week was the fall of Syria. And so I was watching oil prices very carefully to see how they might react. And they didn't really do a lot. They were up about 2% yesterday. They're sort of flattish today. And I think a few things going on there as people look at that is one, they don't produce a lot of oil. They produce 32,000 barrels a day, which is really a rounding error in the global market. But if you look longer term, if things were to stabilize there and there was some coalition of the parties there and they got their act together and the U.S. lifted sanctions and let them sort of ramp back up. This is a country that you look back to 2016 was producing 350,000 barrels a day, one time 400,000 barrels a day. So it's not going to happen in the next year, but longer term, there's potential for them to ramp up their oil production. In the meantime, I think that the fall there sort of gives the U.S. a little bit of a more of an upper hand on Iran because the U.S. and Israel are in there taking out all the weapons that Syria had, and they're sort of disrupting the base that Hezbollah there had, sort of the proxy for Iran in attacking Israel. So I think all this does give a little bit of a better upper hand for the U.S. over Iran. And as you know, there are sanctions on Iran's oil production or exports, which have not been enforced at all. So not surprised that oil's not doing a lot here. And as we said last week, and we've said several times here, it's probably a lot easier to make a bear case and a bull case for crude oil prices. It's a little bit hard right now to see what the catalyst is for a bull case other than some geopolitical event pushing prices up. But, in the meantime, as Ben's talked about, Europe's very weak here. Demand out of China is weak. Oil production here in the U.S., we're not going to have drill, baby, drill. We talked twice here about how on the margin, if there's any increase in oil production in the U.S., it's because you get some capital freed up to invest in some private companies in the oil and gas industry that didn't exist before. So, I'm sort of watching and waiting here. The other side of the coin is natural gas prices. And it's sort of nice and I wouldn't say balmy, but it's nice here in the Northeast today. And what typically happens is the market tends to make a call on the winter at the end of December. In other words, if you look historically, come the end of December, if it's been a very cold winter, then they say, okay, we might get a colder than normal winter this year. But if it's not been a colder than normal winter by the end of December, the market tends or investors tend to throw in the towel and say, we're not getting it this year. And that's why you see natural gas prices down here closer to 310 after sort of bouncing up to closer to 350 on a cold snap here a little over a week ago. So I'm sort of waiting and watching here. A little over 2 months ago, I said I was writing $40 out of the money covered calls on part of my C&Q position. Those expire at the end of next week. And I'm not looking to roll those over or do anything here with C&Q at these levels. So, I took in a little premium on the call option that I wrote on those, and we're just sort of watching to see what direction we go from here. But again, it's one of those situations where I don't feel compelled to go out or buy or sell anything. I'm just sort of watching here and seeing which direction the market goes.
Are you still favoring oil names over gas names?
I am right here. Given oil is $68 a barrel, I am. Longer term, I still like the gas names. I mentioned to buy the gas names, but I don't think we're there yet. And the thing that would make me wrong and late is if we all of a sudden got a very, very cold winter. But otherwise, I think I'm sort of okay waiting and watching here. EQT and EXE, Expand Energy, the two names I'm sort of keeping an eye on if I want to step in here on the gas names.
Mm-hmm. Last week was definitely a head fake in the Northeast, that's for sure.
Oh yeah, it's balmy out today. It's
It's kind of crazy how much these nat gas games. I mean, it makes sense, but how much they sort of trade with how the sentiment literally changes with the weather.
Oh, it is.
It's
It's
wild.
incredible. That's what makes it difficult. So
Well, thanks for that update. I'm gonna move on to David Maris. We got a dividend raise out of Lilly. Got some thoughts on that, and what else you're looking at in the healthcare universe today.
You just took half of what I was going to talk
David's
about.
got a new haircut. For everybody watching that want to know, David just got a new haircut yesterday. So
Your hair looks good, David.
he's very proud of that. Just so you know.
Had to fly all the way to LA to get it done. It's you have to get to the specialist actually. So Lilly, LLY, if you don't know the symbol, I said that I went a small long position just a week or so ago. I put tight stops on it. The stock's actually down a percentage point and a half since then, so not great for a short-term trade. Today they announced that they're going to increase the dividend 15%, and they're also going to do a $15 billion buyback. Now, to give you a sense of what that buyback means, it's about 1.5–2% of the shares of the company, so not that great. It comes on the heels of another $5 billion buyback. But what does that from a volume standpoint? They could do 10% of the volume for the next 60 days or so. And so there's a little bit of a floor would be too strong. Does that say something about the quarter? Does it say, oh my gosh, they want this in to be ready for it? I don't think so. The trends look pretty good, but it could mean for next year, some numbers have gotten up there. So is it possible that they'll do all this buyback in this quarter? That would be a lot to do in 15 days, but not impossible. As most people, maybe subscribers don't know, when companies do it, it's usually a bullish sign. But sometimes it's a sign, hey, we need to manage what we can for next year. And 2 percentage points on the EPS number, while not massive, could help. So I don't think Lilly plays those kind of games on a regular basis, and this is so small relative to their market cap. I don't think that that's the driving force. It does say something about M&A in the area, right? If you think you have some great M&A targets that you're going to really stretch your balance sheet, would you do another $15 billion? They can always pause it if they find something great, but no, you wouldn't. So overall, I view it as a positive. Again, maybe I'm biased because I own a little bit now, and if I were still short from the other day, maybe I'd be, yelling at them saying, "What are you wasting your money on?" But I actually take it as Bob and I were talking right before this, is no one's buying Lilly for the dividend yield, and so increasing it's great. But to be at 0.6% or under 1% for a dividend yield, no one's saying, well, let me screen a whole bunch of stocks. Oh, here comes up Lilly at 0.6%. I think, oh, what do they do? Like, oh, I don't know. They're into obesity. There's no portfolio manager that's like stumbling
Unless
upon.
you've been living under a rock, you know what Lilly does. It's like after Nvidia, it's probably the most talked about stock of the last year or so. Yeah, they're at about 1x leverage right now. Is that sort of normal for them? And within the large cap pharma universe,
Yeah.
is
So
there
for large,
a level
for
of
large cap
leverage that
pharma,
you're finding?
they're low relative to the industry, and they at one times they could go way higher. So they don't, if they're looking, there's nothing that they could want to buy with their current stock price and their balance sheet that they couldn't buy other than maybe Nvidia and whatever Michael Saylor's
Or
company.
Novo. They can't
Yeah.
buy Novo.
Yeah. So on a couple other names, Hims is down a little bit today. There's some news out that Meta is going to start to restrict some advertising for certain sensitive topics, healthcare being one of them, financial services being others. I don't know if that will stick. I don't know if it actually will apply. We'll hear from Hims about this soon. I'm still long the stock. I think that there is a December 21st FDA discussion of whether or not they should still stay in shortage, whether or not the Lilly drug is still in shortage. But look, they've had the whole quarter for GLP-1s plus a base business that's been doing great. So I'm fine with that. On insurers, the tragic assassination of the CEO of an insurance company executive is, in my day, you would never talk about the impact on the industry. This is a tragedy, and let's leave that, and we'll talk about the industry and their predatory practices and all of this a month from now or 3 weeks. Let's get past that. But the narrative is the narrative, and you're seeing mainstream media say, "Look, this is a zeitgeist moment, and this is how upset people are." There was I think, a Gallup poll that came out today that shows that people are more upset at healthcare than ever. Um, so does that bring regulation? Does it not? You have a new administration that's going to have a lot of things on the table. You have some people out there saying, "Hey, this is an employer issue, not an insurance company issue." They're not denying coverage. They're just following the rules that your employer-based plan is on, and that may not be wholly true. So there's some truth to that. That if you go out of network and you run up a big bill and you didn't know that that was your problem, well, that is your problem. But there are also vagaries in how rules are written, and the idea that things are being denied on an increasing basis and people don't have the time to fight these appeals. I think that you'll actually see some traction. That's why the insurers have been weak. I would stay away from that area, or I'm staying away from that area for now. And also today came out RFK Jr., something like 45 Nobel Prize winners came out and said he shouldn't be the HHS secretary because he could undermine public trust in healthcare. I think that's going to have zero impact for Republicans who support him or for Democrats that support him. I think it will be used as ammunition. But look, Nobel Prize winners, the reason they stay in the labs and the reason that they do what they do is that they're not setting public policy. So I take it with a grain of salt, but keep an eye on that. That is, again, something else to watch for the industry. There is an article coming out today that said the pharma industry is not fighting RFK. They've yet to push senators and the rest of the lobbyists. So interesting. It's interesting. I think that he'll get confirmed, though.
Has RFK said anything about the insurers?
He hasn't, but he's been against pretty much all big industry, and he's really gone against pharma. So that's the most surprising thing, is that pharma's not going after him.
The new Republicans against big business. It's an
It's
interesting
so this is the most
I've been
amazing
thinking
thing.
I've been thinking about this insurance thing a lot, because to me I mean, I was not personally surprised by the amount of stories on social media about people having their claims denied, and then the ones that fought them, ultimately finding out that they were covered, that they were obstructed. And I think for most people, it's not a surprise that this is happening, but maybe, social media and this cultural moment has shed light on just how widespread and how common the experience is. And it would seem like it would lead to change, but it feels like there's almost like a parallel to when we have an awful gun violence situation where there's a crew that's saying this isn't the time, there's been a tragedy, which this has been a tragedy. I mean, vigilantism is never the way, right? And but by the same token, nothing ever happens on that front. So I think that there's a good bet you could make an argument at looking at UNH or Cigna or any of these stocks and say, hey, we can't seem to get anything done in this country, even when people are upset. So, does that make these a buying opportunity now?
Well, it comes down to, I don't want to say needle in a haystack, but it's kind of like separating really difficult things to separate, right? Because insurance companies do a lot of things that are really important, that I don't go and get inappropriate care. So they protect me from getting the wrong care. They protect me from getting too expensive care. So and they protect the whole system for doing that. So that's like really, really valuable. The problem is that when they're starting to just deny so that you appeal, or actually don't appeal, so that can boost them, that's the real problem. And that takes a lot of work, right? The easy solutions, and you're right, I think it is a lot like the gun violence, is that we all can agree that certain things, or most people would agree, certain things should be changed. But then when you get into the real nitty gritty of it, it's so hard to change it. So, barring single payer system, we need someone to adjudicate claims. and how they do that is really. I think I mentioned once before. I met with a senator one time, and I said this wasn't that long ago, and I asked him about PBMs, and he said, we're not going to go after PBMs. It's my constituents don't know what PBMs are. Insurance companies, drug companies, they know what those are. And so going after those are a lot easier, at least with rhetoric. So am I chasing the insurance companies down? No. Oscar OSCR is the one that I actually like because of the high volume, the high growth. And so if I were going to go after one of them, it would be that one.
Interesting. They do a lot of ACA though, don't they? Or have they pulled out of that?
I didn't hear you. You broke up.
Yeah,
So
they used to do a lot of like of ACA, Obamacare, like participate in the exchanges more than some of the big guys. Are they still doing that, or did they pull out?
yeah, not that I know of. So I'll have to go back and look at that, but I don't think so.
Okay. Let's move on to
I mean,
banks.
they are. I shouldn't say they are in exchanges, but it doesn't. I don't think that's the majority.
They're not overweighted relative to how the others are positioned. Let's move on to bakes. If you were done, David, did you have anything else, or are we good?
Well, I was going to talk about Nintendo and Capcom, but I'll wait till tomorrow to talk about video games. A little bit more fun than healthcare insurance.
Cool. So Bates, well, I know you've got some fun charts for us. One of them is a name near and dear to my heart, so I'm looking forward to hearing about this.
I'm not a sycophant, but I like giving props, and I'm just, I've been here, I don't know, 3-4 months now, and I'm just very impressed with the breadth and varied ways that we make money for subscribers. And I've got 3 charts to share with you here. This is Real. This is Berna's, my moderator today, our moderator today. Here is the end of 22. Buy at $1.40, give or take, at around $5. I almost got misty eyed when she said, I took my original investment off the table. Anytime I double money in a short period of time, I do the exact same thing. Here is at and I'm sure this was a scary time. The bankruptcy was being talked about a lot here, and this is 484. Took that out, and this is why I pay attention to this. And now that's a false precision. It isn't 485 but when you could close above a prior resistance level that's been in place for 3 years, then look how easy it is to get the next 3, 4, 5 points. And you have big volume. You have it was up 35% yesterday, and I didn't talk to Berna about this prior, but I think this 11, 12 level up here is kind of where you go. You don't have a lot of resistance over here. Almost everybody's making money at this point. I don't know anything about the fundamentals whatsoever, but I know this is emblematic of what we do here at Wall Street Beats, where we find unorthodox. No one's talking about real any place else that I know of, and it's just something has clearly changed here. You can point to the fundamentals, but this is a clear winner with more to go, in my opinion.
I'm just going to throw something in here because both Bob and David both worked on the sell side for many years, and the amazing thing is that this breakout was spurred by a sell side report. So one of the analysts, I think at Wells Fargo, took their price target from 4 to 15 yesterday in their upgrade, and basically talked about all the stuff that I've been talking about fundamentally, that the business model is changing and improving and moving into profitability and rationalizing the way they do business. But it's just funny to me because there was a time probably in the 90s where you saw 30% moves all the time from sell side reports, but I can't remember the last time that a sell side report moved a stock 35-40%. I don't know about you guys, but it just felt like a flashback to a different era.
Yeah, the last time I saw it was when Bob was making the calls on oil and gas, to send these stocks moving. But do you think there's a risk that there's an offering coming? What do you think from a balance sheet standpoint? The only reason I say that is sometimes these beaten down stocks, yeah, someone takes a fresh look. Sometimes someone comes to them and says, hey, can you take a fresh look at this? They may need to raise money.
I mean, I mean, never say never, right? It's possible, but they have about $150 million of cash on their balance sheet, and net cash, and they're not burning money anymore. So it's possible, but unless they think they're going to go back into the red, for a company that's got, 600 million in sales, 700 million in sales, is 150 million net cash enough? I think so.
What's for our subscribers and our viewers? Refresh our memories. What Real does, and what kind of short interest are we talking about here? And is that part of the story?
So what they do is they're an online consignment store, so that for luxury, so high-end brands, Chanel, Hermes, Louis Vuitton, bags, clothing, jewelry, some, tabletop household goods, things like that, high-end sneakers. You can sell, you as a consumer can sell what's in your closet. You send it into them, or they come pick it up at your house. They put it up online. So they're basically taking what used to be a really fragmented market of high-end secondhand stores all over the country and the world, and consolidating that inventory online. And they take all the inventory in and hold it and authenticate it. So your chances of getting like a fake Louis Vuitton versus a real one, buying there are much lower than when you're playing on, eBay or Craigslist or, Facebook Marketplace or whatever. And as far as the, and this is a big trend. So Gen Z, younger millennials, have fully embraced secondhand stuff, partly for eco-friendly reasons, and partly for thrifty reasons. And part of it is just wanting to have a unique look and not buy the thing that's in the stores now that everybody has. So it's a big trend on all levels. Like, ones with less money are going to like your Salvation Army thrift stores. And it's actually become a side hustle of trying to buy things at thrift stores and then flip them over on these platforms. And so this one, the thing about that makes the business tough is that everything's a skew of one, right? Like you have a million, you don't have you don't take a picture of a piece of inventory and then have 1,000 of them to sell. You have one to sell. So it's very intensive in terms of like taking pictures and making a description online for all these items. So I think that within resale online, you want to be in the luxury place where, the average selling price, I think their average order size is, about 400 or 500. But, they have items going up to $200,000 on the site, jewelry, rare Birkin bags from Hermes. And so because the variable cost of each sale is high, I think, you'll make money selling used Louis Vuitton bags, but not used Gap jeans, which other people are trying to do online. And I don't think that business will work. In terms of the short interest, it's about 21%. So
okay. Yeah. All right. Great call.
They may have a convert. I can't remember. It's escaping me right now. So that may be a little part of it, but definitely not all.
Have you looked at the company Winmark?
No, I don't know that one.
Yeah. So there's on the same theme, there's this, again, in my day, you wouldn't go and do this, but you're right. Sustainability. There's a Plato's Closet. I think it's a very, very big chain of clothing stores for mostly, I want to say young women, but maybe 20s or so, consignment sales. And it's kind of like the hip thing to do. And they have, I want to say hundreds, but at least dozens of stores, but they're owned by a public company called Winmark. But I don't know.
I'll have to look that up. I don't know that one.
Yeah, WINA is the symbol. I've got the chart up here, and it looks like it might be Real 2, the sequel. I don't know that, but that's a base that's been in place for a long time, and it looks like it wants to go north.
Oh, cool! So, I'm going to take a
they're
look
in
at
Minneapolis. They can't go much further north, Kevin.
They sell musical instruments too. That's near and dear to my heart. Anyway, I'm going to go to the National Presto next. And Ben Bry talked about this either yesterday or the day before, I forget which. And this is just another sign. I mean, I think National Presto, and I think like Salad Shooter, you know, that's what immediately comes to mind. And then Ben says, no, most of the business is for the Department of Defense. And it clearly has taken out this high here, bends it around in the 80s. Here we are at 91. And I think that, but from my eye, you know, up here at about 100 or so is where it might, take a breather. But this is just a classic case of an unorthodox name and an unorthodox approach, being open to new ideas. And the volume picks up here. It takes out this high at this 84 level and bends in around here. So, I just urge everybody to subscribe, because you're not seeing these ideas anywhere else. I'm a podcast and investment service junkie, and I just devour this stuff. And I don't care about unemployment and Fed meetings and minutes and conference board surveys. I just want to make money, and we do it here all the time with very, very smart people. So yeah, we're talking our book, and unabashedly so. But the range of ideas that comes from these very smart people, I'm impressed by. So, all right. Lastly, did I lose you?
No, I'm here.
No, we're here.
This is Science Application, SAIC, and Ben Bry and I have been talking about this for months now. That Doge is real, and this is a company that provides technology consulting to the federal government, and this is a short that he put on. So here we are, the S&P's at new highs, and we're making money, shorting Enphase with Russell Young, and we're shorting SAIC with Ben Bry. And I just, I look at this, and this has started to, hit the buttons that I use in my sell discipline. And, again, I'm going to ask for the order here. Everybody talks about buying stocks. And I, for one, talk about selling stocks a lot. I went back and, because I don't want the same dog to bite me twice, developed a discipline where I get out of ideas in a very disciplined fashion without having emotion attached to it. And so when this closes below the 200-day moving average and the 200-day starts going down, I would have sold 2/3. Full disclosure, I'm not here, but Ben is short around here. And we haven't even had the inauguration yet. And I think that anything to do with the federal government, your revenues are coming down. Your cost structure is likely very, very bloated after taking for granted the inexorable growth in the federal government. I don't think K Street's going to save you this time. I could be wrong, but I think the interest expense and the political winds are blowing in an entirely different direction. Here we are at 114, and if it takes out this 112, I think you start going down into double digits, and this 80-90 level down here. So I just implore people that are using other services, please go to our website. Sign up for free for 14 days. We've got and this is just the tip of the iceberg. This roundtable. We've got a lot of other commentary and publications and goodies in the Stock King section on WhatsApp, and you get to see. If this was a portfolio management team, you would hire us to run your money. I just flat believe that there are no weak hands here. There is nobody that is taking up space. And I, for one, if for subscribers, I offer this. If you want me to come in and say, hey, Biggs, what do you think about this? Should I sell this? I will give you my unvarnished view of here's what my sell discipline would say. And I do not lose a lot of money. I just flat out don't. And I would like to bring that to bear for you. So please.
Kevin, if I could jump in for 1 second. One of these good examples of this is just what hit the chat just while we were speaking. Our colleague Charlie Peabody's at a bank conference, and he said Citigroup just presented literally just now at the Goldman Sachs conference. They guided up their investment banking fees, and he gives some more very detailed comments. And Russell, another colleague, just said, hey, listen, I bought some Citigroup, symbol C. And Charlie said, look, it should run into the January 25 complete guidance outlook, but the preliminary guide is very positive. So again, that to me it's super valuable if you're investing and want some color real time on how things are going and kind of his perspective of it.
Yeah, and I couldn't agree more. And I find it helpful because I hear Citigroup and I hear, okay, if someone tells me one more time that it trades below book value and it's so cheap, I'm going to throw up on my shoes. And then Charlie said, wait a minute, Bakes, I said that for 20 years and now things have changed. And you have the Mexican subsidiary spinoff coming and things like this that, so this helps me check my biases at the door, and I got a billion of them, and I have to rethink assumptions and make money anew with fresh eyes. And and we there's fur flying sometimes, and we don't agree on a lot of things, but that's where the money is. And when the technicals and the fundamentals line up, and you have our team opining on what they're seeing with their investments. This isn't hypothetical. This is we're all talking about our investments, and I just think it's fun. I think it's profitable. We're going to highlight how profitable we've been this year, and I just encourage you again. Sign up, give us your email, sign up for free, and fire questions away. And I look forward to a great 2025 because we killed it in 2024.
Bakes is not only our technical analyst, but he's also an excellent hype man. But I appreciate the kind words.
But very sincere. I am what I am, Popeye. So it's.
Excellent. Well, I think that's it for us today. As Bakes has been telling you, please come check us out at wallstreetbeats.com. We do have that 14-day free trial offer up there, and you'll access the real-time chat with that, our written research, and a whole bunch of other stuff. So thanks for being with us today. I'm Berna Barshay, and we will be back tomorrow with more stocks, more ideas.
Keep smiling.